All right, welcome back to Market Day Report. I am Scott Schultz, otherwise known as the Cow Guy. It's the last time we see each other, isn't it? But no, not really, because you're going to stick around for the Cow Guy close. Top of the hour, that's going to be in about, just over 15 minutes from now. 15 and a half minutes from now. That's the Cow Guy close. 1 Central, 2 Eastern. I'll see you there. Lots to talk about the Fed, oil, what's going on with how we trade this stuff. So 1 o'clock Central, 2 o'clock Eastern. All right, let's take a look at corn. Let's jump over and see what that's doing in price action right now. SEP's up 15 3/4 cents down. 611 is last 3 cents off the lows of 608. Dees, the new crop, up, down 17 3/4 cents. Now down 18 to 610 1/4, and that's about 2.5 cents off the lows there. Let's see about soybeans. That's still going to be pretty bruising if you know what I mean. September's down 42 3/4 cents. 14.51 1/4. November, the new crop, down 30.5 cents to 13.81 1/2, and we've got $14 significantly in the rear view now, and that soybean contract. Let's look at Chicago wheat. What's happening in the Chicago wheat market? Well, it's lower. Shock guffaw, they say. September's down 14.5 cents to 786 1/4, 4 cents off the lows, and we've got March in the middle of the deferreds, off 15 cents to 816 1/2, 4 cents off the lows there. Hard red wheat in Kansas City, the old HRW down there. SEP is off 9 3/4 cents to 873. Dees is off 11 cents to 874. Both of them about 4 cents off the lows there, 4 to 5 cents off the lows. So kind of heavy as we trade going into the close. Spring wheat in Minneapolis, well, 8 1/4 cents lower in SEP, 902 1/2 is last. And we've got an 11 cent loss in the March to 923. Let's see what the cotton's doing. It was on fire earlier, and it's getting back up to those levels again here, folks. 117.98. We're up 439 points in Dees. That's the one to watch. We're still about 150 points off the highs. So let's bring in our next guest analyst, Ted Seifried from Zaner Ag Hedge. He's in Chicago. Ted, thanks for being on the show. I just ripped off a bunch of prices for you. Anything jump out of you?
Yuck. I mean, it's been a nasty start to the week. Absolutely. Go back to last Friday's USDA report day. Sharply lower soybeans on a bigger yield number, but then by the end of the day, we're back positive on the day. And it was a fairly bullish corn report. But then we go into the weekend, and then we see a change in the forecast. We had been looking at a cooler forecast. Now we're looking at a cooler, wetter forecast, and wetter for the areas that really need it the most. So we're taking the weather premium out. The weather market may be over for now, unless there is an absolute dramatic shift in the forecast right away for the near term. So that being said, now what do we look at? We look at crude oil, which is below the 200-day moving average and looking like it's going to close solidly below that 200-day moving average for the first time in the contract life of the September crude. So, risk off and energy's lower. That's not a great idea. Seasonality, usually we're headed down at this point. You've got crop tour next week. I can't remember the last time I went on crop tour and we didn't have markets, or we had markets not sharply lower during that week. It's just that time of year, Scott, and we are at higher prices and have been at higher prices for so long. There's got to be some concerns about demand out there. At some point, high prices are, in fact, the cure for higher prices. So all this is kind of coming together in the market at the same time. Now, maybe we have a bounce into the end of the week, but at the moment, we've done a lot of chart damage. And if we close down here, these charts are not looking good all of a sudden. I mean, you went from a potential breakout to the upside on Friday, but pausing right at very key resistance, to now a failure of that breakout, and now looking for that support down below us. Again, charts aren't looking good. But what a difference a week makes.
Yeah, what it says to me is that you're exactly right. We've done a lot of technical damage, and unless we get new bullish news, that's going to probably be the key. So the technical damage will be the one that we have to watch. Stay right there. We're going to go away. We're going to pay some more bills. We're going to come back and talk more with Ted Seifried from Zaner Ag Hedge in Chicago after this. All right, welcome back to Market Day Report. I am the Cow Guy, Scott Schultz. Thanks for tuning back in with us here. It's time to look at these livestock prices. Let's jump right in. Let's waste no more time. Let's take a look at what's going on with live cattle. We're up on the day here. October's up $1.77 to 145.57, and that's just off the highs by about, say, 25 cents. We've got Dees up $1.40 to 151.12, and that's pretty close to the highs as well. 20 cents off. So live cattle trading strong going into the last part of the day here. How about feeders? What are they doing? Feeder cattle, they're higher as well. Look at this. September's up $2.50 to 185.50. But we're not near the highs. We're kind of in the middle of the range here. We've got a $2.45 gain when we come to October. So 188.05. And then finally, let's take a look at lean hogs. We're trading heavy the last time we visited them. And let's see what lean hogs are going to give us here as the technology rolls over. Let's see. October's off $2.67. That's no bueno. 97.90 is last, and that's 10 cents off the lows. April's off $1.30 to 94.20, and that's about 8 cents off the lows. So that's a good segue to bring on our guest analyst who's been sticking around waiting in the wings, Ted Seifried from Zaner Ag Hedge in Chicago. Ted, what do you think about the livestock?
Feeders holding on to some solid gains. Yes, we're about a buck off the highs, but we're closer to the highs than we are in change. So that's good news for me, and it's needed on a day where corn's down pretty significantly. I really like to look at that feeder cattle chart, Scott. I think there's more upside potential there for feeders. Live cattle having some pretty nice gains here today. So I'm, very similar situation there. We're optimistic that we're going to see some higher cash trade this week. I'd like to see box beef prices kind of start trending back up. But I think the expectation is for that to happen. And I think that's part of the reason why hogs are under a little bit of pressure today. The idea is that people are willing to spend more on the more premium cuts of protein. So a little bit of cool off day for the hogs. But overall, I still think that hogs chart looks pretty good as well. It seems to me, for as bad as the grain charts look all of a sudden, as good as the livestock charts have looked for a little while. And if those feedstocks are going to come down fairly significantly, that could be a really good thing for the livestock on continued rallies there too. So, I like what I'm seeing in the cattle complex today, and the hogs is just the day.
All right, well, I couldn't have said it better myself. That's perfect timing too. They just gave me the wrap sign, so appreciate it. Ted Seifried from Zaner Ag Hedge. Give him a call if you've got to move some stuff, but he knows what he's doing. He's in Chicago. We're in Nashville. I'm going to throw it back over to Suzanne one more time.